Okay, hello. We're going to be talking about giving kind of an overview here of the production job. And I could have done this as the very first thing that we discussed. I didn't think that it's quite as essential as some of the other things, especially related to the projects that you all are going to do. So I thought I'd wait until later in the semester, later in the course, to talk about this, but we'll have the opportunity to do it now. We'll do it in two parts. This is based on the textbook Digital Audio Production by Donald W. Conley in his third edition. Considerable amount has been added to it as well. Much of the information, by the way, in this outline would also apply to television stations and other media organizations. This is not entirely unique to radio, but we're going to talk about the radio station as a business, the profit perspective, which is really true of all media. Maybe public radio and TV are an exception, but even then, there's a business aspect to it. So the radio frequency that a radio station uses belongs to the American people, belongs to everyone. And the stations are licensed by the federal government, by the FCC for 8 years, and then they have to go and they have to renew that license. So that's an important thing to understand. And let's look at a video here, at least part of it, on the licensing aspect. Also, this idea of public interest, convenience, and necessity.
Now, newsman Dennis Dingley presents his unique look at current events in another of his wide-ranging daily video blogs.
Hi, and thanks again, everybody. You're looking through a window at the radio station where I work at a bunch of people getting ready to do a public affairs radio show with my boss. Public affairs shows go back a very long time, but you hear less and less of them on radio, and there's a reason. Radio stations have much lower standards to live by than they used to. Let's go back 60 or 70 years and pretend that you want to open a radio station in Hokieville, Missouri. Well, you have to apply to the Federal Communications Commission. But if the commission has not already said Hokieville can have a radio station, there's something you have to do first. You have to prove to the FCC that a frequency will fit in Hokieville. You see, everything's a big jigsaw puzzle. If you're at 97.5, there can't be another 97.5 within X number of miles of you, and there can't be a 97.3 or a 97.7 or a 97.9 or a 97.1 within certain miles of you, and that can get very complicated, and all that stuff was done decades ago before there were computers. There were also fewer radio stations then, so the jigsaw puzzle was not as crowded. But let's say there is a frequency available in Hokieville, and you apply for it. Well, that becomes a matter of public record. Suddenly somebody in New Jersey applies for it. Now, why in God's name would they want to put in a radio station in Hokieville? They don't. They just want you to buy them out so they'll get out of your way, so you can have that radio station. In the old days, you used to have to promise to serve in the interest, convenience, and necessity of the city of license, Hokieville. You promised to do X number of hours of news and local programming and public affairs and talk about the high schools and Kiwanis and the Girl Scouts and the Women's Club. You still kind of have to do that. But if you've ever not been able to sleep some weekend, you know an awful lot of radio stations do it at 4 in the morning. Not mine. I'm Dennis Staley with your daily news update.
Okay, that's basically the end of that. So that's an interesting perspective on public interest, convenience, and necessity, and being licensed by the federal government, the FCC. Stations still must receive a license. They still are required to serve the public interest, convenience, and necessity. It's the interpretation of that may be a little looser now than it once was. Many stations still take that very seriously, some less so, but it's still an important part of radio broadcasting and television broadcasting. Radio and TV stations must serve the public interest, convenience, and necessity. Now, this only applies to broadcasting. This does not apply to the internet, so any kind of streaming media really doesn't apply to cable, for that matter, or satellite. But it does apply to broadcasting, which basically means your local radio and television, over-the-air stations. Stations have operating expenses. They have a mortgage, quite likely. Building and tower rental. They may not own the tower on which their antenna is mounted, and so there's a rental fee there. There's music copyright fees. Every time a song is played over the air, there are fees to be paid for that. Of course, payroll or salaries for employees. So operating any kind of broadcasting station is an expensive proposition. In some respects, maybe less so because of automation, fewer individuals employed full-time for a radio station these days. If the station can't meet its expenses, then it will be sold or leased or taken over by an entity holding the largest debt, if you're talking about a potential bankruptcy, or at worst, it would go dark. It would just cease to exist, go off the air. So radio broadcasters, television broadcasters, really all media, have to generate profit, have to generate revenue if they're going to continue. There's an obligation to the owners, who may or may not be involved in the day-to-day operation of a station. And so there's a concern about something called return on investment, or ROI, and the ongoing, continuing growth of revenue. So this idea of return on investment is an important idea, not just for broadcasting, but for all business. So let's have a look at that.
Warning. If you have more than $20,000 in an IRA or 401k, please heed this urgent message.
Welcome to the Investors Trading Academy, talking glossary of financial terms and events. Our word of the day is return on investment. Return on investment is known as ROI. This term means different things to different people, often depending on perspective and what is actually being judged. So it's important to clarify understanding if interpretation has serious implications. Many business managers and owners use the term in a general sense as a means of assessing the merit of an investment or business decision. Return generally means profit before tax, but clarify this with the person using the term. Profit depends on various circumstances, not least the accounting conventions used in the business. In this sense, most CEOs and business owners regard ROI as the ultimate measure of any business or any business proposition. After all, it's what most business is aimed at producing, maximum return on investment. Otherwise, you might as well put money in a bank savings account.
That's an important point. Why people invest in a business in the first place, because they think that they're going to make a profit, that their return on investment will be greater than what they would get if they simply put the money in the bank. And of course, interest rates for any kind of investment in a bank, certificate of deposit and so on, is negligible these days. Or they might put it in the stock market rather than investing in a radio station or a television station. So the return on investment needs to be greater than what they could get with some less risky investment.
In simple terms, this is a profit made from an investment. The investment could be the value of a whole business, in which case the value is generally regarded as the company's total assets minus intangible assets, such as debt. Or the investment could relate to part of a business, a new product, a new factory, a new piece of plant, or any activity or asset with the cost attached to it. The main point is that the term seeks to define the profit made from a business investment or business decision.
I'll pause that there. This is a little bit far afield from specific discussions about uh, production, radio and audio production, but nevertheless, it's related, and all of this is in context then of the reason for the production work, the audio production work that a production director, for example, might do. Each budget item then is considered. Does it contribute to profitability? So, and if it doesn't, then maybe something that can be done away with. The production director, how does he or she show profitability? That's a fairly challenging thing, but I think it's understood. The production director is directly involved in the production of commercials and works, as it says, works for the sales department, is working very closely with the sales department. And so if you're going to have commercials and to make a profit, to earn revenue, you pretty much have to produce commercials. And the production director, people who work with them, are understood to be pretty vital to the success of the radio station or what have you, some other form of audio media. So there's a little anecdote here about a production director working with the salespeople.
Hi, I'm Dan O'Day. The commercial production director of a major market radio station swears this happened to him, and I quote, "After all the years of doing this, I thought I had witnessed every possible stupid salesman trick. Wrong. One comes up to me and says, 'You know that spot you did for client X? We're not getting any response.' I say, 'Well, what do you think is wrong?' She says, 'Well, I did put the wrong phone number in the copy.'" The production director continues, "I sat there stunned for a while, and then I said, 'Why don't you call that wrong number and see what kind of response they're getting?' If you work in radio, you know that's a true story." I'm Dan O'Day.
Dan O'Day is a well-known radio consultant. So give me a moment here while I relaunch what we were talking about. I'm having some problems with PowerPoint here, and this is where we were. So it's important that there be communication between the person who's involved in production and salespeople. You've got to have essential information in commercials that are produced, such as the telephone number or web address or email address or anything by which people in the audience are supposed to contact the business. The production department is the hub of the radio station, in that the station's commercials must be successful for the clients. Clients must feel that their money is not wasted, that they're getting what they paid for, which is attention from the radio station's audience. And then those members of the audience are responding to the commercial, and they are coming to the business by whatever means they do that, and spending money with that business. So the advertising aspect of a commercial radio station, and that's almost all American radio stations, is just absolutely essential. What makes a good production person, and in essence, we've been training you all to be production people in this particular class. Well, computer literacy is important, obviously, because everything now is done on a computer. Creativity, so you can be very knowledgeable about the computer, but really not have much in the way of creativity. We've talked a good deal about that. Writing skills. This is not a writing class, but I always say that writing is important. We talk about bringing creativity into your writing as much as you can. Musicology or knowledge of music, understanding of music. You don't have to be a musician, but a feel for music and what works or doesn't work in a particular situation. Artistic expression kind of goes with creativity, really, and writing skills and everything there, but in particular creativity and writing skills. And then just good judgment, good taste in production elements. That's a hard thing to define. There's one more video that we'll look at, and then we'll wrap this up, at least for now. We won't see all of this, but this is a very good video.
Here at MJM, in the last 30 years or so, we've created a lot of radio commercials. I like to think most of them were effective, and I know a few that weren't. Now, from all this experience in creating and producing radio ads, I've come up with a list of 20 frequently asked questions. Usually they've been asked by our clients. Well, let me walk you through this list, and I'll elaborate a bit on each point. First of all, why radio? Well, it's the only medium that goes directly to the right brain and only the right brain. Why the right brain? Well, people make every buying decision in the right brain. Which branding is better, emotional or logical? Let's look at that. Emotional branding is done mainly in the right brain through audio. Logical branding or visual branding is done in the left brain or the logical side of the mind. People buy in the right brain. That's where you want your branding to live. 4, why engage the imagination? Well, to engage the right brain where people buy, you need to engage the imagination. 5, why is radio better than print? Well, print is totally visual and all left brain, not engaging the imagination. Why is radio more cost-effective than TV? You get better emotional right brain processing for less money. To learn more on this topic of right brain imagination engagement, check out my blog on how radio impacts buying decisions. You'll find the link below.
Okay, I'm going to pause that there. You can watch the rest of it. I think it's all good, and it's a worthwhile thing to see and to listen to. But I think we'll pause it at that point. All right, we're going to continue this discussion next time, and thanks for watching, thanks for listening, and we'll see you next time.